Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your host for the terrific show that we bring to you each and every week called The Mortgage Voice. And I appreciate you all tuning in from San Bernardino and Riverside counties. How are you all doing out there? I know that at this time of the year, it's mid-February. A lot of people are worried about taxes coming up in middle of March, trying to figure out what's happening in both their work life. They want to make sure that they have enough money so they can go out there and buy that home that they've been wanting to do. Talked to a client today out in the Inland Empire, and she told me that her husband and she are waiting for their taxes to be done so that they can then use that money to be able to go out there and get the loan that they need to get in order to afford the house they need to afford. Good thing about all of that is that the inventory in the U.S. and in particular in San Bernardino and Riverside counties are up quite a bit from last year. What does that mean? It means with more inventory in the marketplace, you can go out there and bargain and negotiate better, meaning that with more, obviously, supply and demand, right? Everybody always says that. If there's more supply, there's less competition. You'll be able to get a more one-on-one with your seller and be able to negotiate a little bit either on the price or the terms, or, for instance, if you have an inspection that shows up defects in the property or things that need maintenance. I mean, there's always things that need to be done at a house. Anybody who's owned a house can tell you the maintenance on a house is continual, it's never ending, and it can be expensive. I know people who neglect to do it for a while, whether it's your roof, one of the big ticket items, right? Depending on the size of your house, can cost you up to $25,000 to redo your roof. Now, recently, we have been looking at solar. And in order to understand solar, of course, nobody really understands what is a solar voltaic cell, how does it work, what is the science behind it, can I save it, can I store it, do I have to sell it back to my power company, what kind of roof is it that I need? Do I need risers? Do I need a slanted roof? Are there actual tiles? Should I go to the Tesla company and use their particular tiled roofs because they look so cool? What are the options for me if I'm using solar? I bring up solar because in some of the purchases that we're having right now, and they've been going on for quite some time, solar has been very popular in a lot of Southern California, as it is in most of the nation now, where we've got probably 10% of the population, 10% of the houses out there with solar already on it. As global warming takes effect, as the push to try to do something about it personally, I mean, I can't affect what we're doing on a national scale, whether we get out of the Kyoto Accords and what that means for our country. But personally, what can I do about it? Okay, so we've taken a little bit of that at my house and we went out and we're looking at solar. But in the broader industry in Southern California, there's several ways to buy solar. And if you have solar, you know what I'm talking about. If you don't have solar, this is what I'm talking about. You can buy it, you can lease it, or you can pay it off over time. Meaning that if you lease it, obviously somebody else owns it, and you're just paying them a monthly fee. And when you're ready to sell your house or however you transfer title, you have to deal with the solar company. And that therein becomes the issue when you're getting a loan. We had a property last week, came down to closing, and they noticed that the solar panels had yet to be subordinated to the first loan. Now, what do I mean by that? Most people who lease solar panels, they have, or solar systems is what they call them, they have a lease, and that lease is a loan. It's basically saying, okay, we're going to give you all this, and you're going to pay me back. That loan is basically subordinated to the first lien, meaning your mortgage. Your mortgage comes first. Let's say you BK. Really, this is why it's all important. Let's say you go BK, or you're just can't pay your mortgage and you default on your note, and they want to take the house back. Well, most people have your solar company in second position. Your mortgage takes first position. your solar takes second position, and maybe other liens take positions after that. You have tax liens, a whole bunch of other things that can be on your title when you go to sell it. Well, in this particular case, this particular client, they had their solar panels, which for some reason had yet to be negotiated, them to take second position, meaning that they still had a lien on the property. There was a refinance in place. The refinance was ready to fund, but nobody had gotten permission from the solar company to subordinate to the new refinance loan. So it took another couple, 3 days, and we got it squared away, and so it did fund, and it wasn't a problem. But these are the issues when it comes to solar, and that's why if you can afford it, and you probably also escape all the finance charges if you do go out and buy it, do go out and buy a system. So if you can afford to buy it, now what does that mean? Okay, so I looked, and a lot of people do the same thing. I looked at 10 different companies out there in the marketplace. And if you go to the internet, you Google it, or however you search for it, and you put in your zip code or your town or whatever it is, you'll have 10 to 15 to 20 different companies that does or do solar install. Solar install is a booming business in Southern California. The question is, how do you go about finding out which one of these companies? Well, obviously you got to interview, you got to do your research, you got to look online. So I'm in phase 1 of that. I found one company out of 10 that I looked at that I thought, okay, I'm going to call these people because what they're saying online is a good thing. Now, most of these solar companies, because they're in business to make money, don't want to give you a quote because they want you to commit to them before they actually come to the property and spend time and effort in giving you their expert opinion as to what type of system, how they're going to affix it to your house, and your financing terms. One company out of these 10s didn't require that, actually sent their engineers out to do the entire, not only cost estimate, but the design of the system at your house the one time they come out. And this was a company that didn't advertise. I found them online because it's the only way that they actually do advertise is through their website. But they don't do commercial. Now, everybody's heard the commercials, either Solar City or I don't know how many. Do you know a couple of these solar companies, Daryl?
I see a lot of commercials for Peterson.
Right, Peterson and Dean, right. That's another one. So they don't do that. They come out to your house, they give you an expert opinion as to exactly what to do when you're getting solar. They design a system for you, and they give you some financing terms if you want to finance. Now, of the 3 ways we think we're going to buy, because for a 2,000 square foot, and they basically say, okay, you want this type of panel, and you want this many kilowatts to be generated by your solar panels in order to meet your energy needs. So they take a look at your bills for the past year. They try to get an estimate of what your peak times are, what your less times out, and then they want to make sure that you're buying a system that fits your roof, that fits your budget, obviously, and that will give you the power that you need. Now, on our Las Vegas television show, we've had a guy out there who's an energy broker, and that's what their hybrid person is, who isn't necessarily working for a company, but who actually works for you. You hire this person to go out and shop around and find you the best energy sources, whether it happens to be, wind or geothermal, or in this case for us, it was solar power. And what I liked about this particular company, it seems no frill, very science-oriented, and obviously a hands-on work crew that came out and tried to solve problems rather than sell you on something. There are companies that even charge you a $1,000 deposit before they even do come out because they, as I said, they want you committed. There's only so many hours in the day, and they don't want their expertise and their quotes floating around out there so that you can shop them and eventually go with somebody else. I understand the business philosophy. I don't like it, and that's why I'm not going to call them. So in Southern California, in this spring market, in what we're looking at in terms of financing, if you have solar panels currently, or you're looking at a house with solar panels and you want to buy that particular house because you like the idea of cutting down on your fuel bill, but also it reduces the carbon footprint of your home, of the way you live, and thus, personally, you are doing something about global warming. Now, all of these things are intellectual. I mean, the reality is we're working. I got bills to pay. What's the best way that I can get to the goal that I want in order to be able to satisfy my needs? I think these are the questions you need to ask, and then, basically shop around for your best option. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. Pick up the phone and give us a call. We expect to have a terrific spring buying season, and that means you're going to need a loan. You're going to need somebody to talk to. We have a terrific staff here at Malibu Funding. Malibu Funding is the company that sponsors the show. Thanks very much to those fine folks who do that. We do appreciate it. They've been sponsoring the show for the last 5 years. We're always looking for new people to come on the show, new guests to try to educate what both our buyers and sellers need, and also to just let us know what's going on in the marketplace and also in the business. We have three great guests today to actually do that, and we appreciate them coming on the show. Let's get right to the news to use section. Oh, and by the way, KCAA, KMET, K Tahoe, and what's the last one, Daryl?
Yeah, we've got them. I just don't have the call letters yet.
Okay, very good. So we do have a New Mexico station coming online as well, which I really do appreciate it. And by the way, that's a terrific place to vacation. I don't know if you ever been down to New Mexico?
About 300 times. Yeah.
Oh, yeah, exactly. Beautiful state, great place. Whether it's Taos or whether it's Albuquerque or whether it's, any number of other spots. It's really, really a great place to visit as well as to live. So we're going to welcome them to the fold. San Bernardino and Riverside counties, we are certainly heard in L.A., Ventura, all over that big corridor, especially if the day's right and the winds are blowing correctly and it's a clear sky. You can hear this signal at KCAA and KMET all over the place up in Northern California. Tahoe, of course, K Tahoe, they're bringing us to us. And we have a number of real estate agents as well as mortgage brokers in all these places. MalibuFunding.net is the website for the company. If you go there and look at the brokers or the loan officers, you can see a number of different people, probably 30, 40 different loan officers. Pick one out, pick their brain, ask them any question you want. No obligation, obviously. If we can help, we will help. If we can't, we'll try to find you someone who can. That's just the way it is, because servicing housing needs for people who need a house is extremely important. In an earlier segment, I was happy to say that the inventory in Southern California has increased exponentially from what it was last year. We were in sort of a crunch last year. Now, it doesn't mean that we're building more houses, although more houses are coming online. We spoke last week to an agent up there, and she told us up in where was it, Menifee and some of the other places up in that neck of the woods, there's hundreds of houses coming online in the next 3 to 5 years. There's a big building phase going, so I do know that that's happening.
Yeah, she was Temecula, Winnetka, that area there.
Yeah, exactly. Okay, so good news on the housing front. Let's talk a little bit, news to use section, the mortgage rates holding a pattern. I guess we have had, over the last 5 weeks, since rates dipped about 0.5 point. We were heading towards 5.5, and all of a sudden the market changed, whether the bond market or the stock market or any number of things that can affect what the mortgage rates will do. Anyway, we currently have 30-year fixed rate. This is an average, of course, across the Southland, 4.375 to 4.5%. Holding steady to about what they were last week. And these markets tend to go up and down daily, if not several times during the day in volatile months. We've had this range from really 3.5 to 4.5 for about 5 or 6 years. We did, as I say, creep above 5% last year, but we're now down to 4.375 to 4.5% again, which is pretty good for the 30-year fixed. It is making housing more affordable. I know that is a key, especially for those people. Now, we've got a lot of kids coming into the marketplace who have huge student debt. We talk about it all the time. $1.5 trillion of student debt is really shackling most of these kids from wanting to get a house. Well, not from wanting, but from wanting to commit to getting a house or commit to any kind of long-term real estate wants. The reason is that owing money when you're 18, 19 years old to the tune of $200,000 or $300,000, well, that's going to deter anybody from wanting to invest in their future in real estate, because you're saddled with that. You have to pay it back, which means that you've got no freedom. And when you're young, freedom is about freedom of movement, freedom from debt. Not, if you don't like the job, you can quit a job and go get another one. Or, how it is when you're young. You just don't have that commitment to debt the way you do when you're having kids, you buy a house. And that comes later when your life shifts and you want different things in your life. When you're young, it doesn't. So what happens is a lot of the younger generation who now are of age to want those things can't, because they're still saddled with this student debt. It's a terrible problem. I don't know how we're going to solve it. Nobody's addressing it. There are companies that can reduce your interest payments, but they can't reduce your principal. And I don't know how we're going to deal with it. I would like to see something along the line of principal reduction on some of this stuff. I don't see why we can't do it, but $1.5 trillion is a big number. So I really don't know what that's going to be, and I don't know what the future holds for higher education, because obviously anybody who's buying a house right today is looking at the public schools, right? You're a young couple, or have kids. Let's say you're of that group, right? First-time home buyers, you got kids, you're out there, you're looking around for a house. First thing you think about when you're getting a house, not only the house, but the location of the house and the school system you're going to get in. Why? Because more than likely you're going to send your child to that school that's in, obviously, where your house is. So those houses which are in good school districts bring bigger money, especially if there are children in the household, which for most people who are buying for the first time, either they have kids or they're looking to, have kids in the future. So because of that, and because of the supply and demand that exists in the marketplace in those great school systems, it's a problem if you're looking at, private education. If you move into a school system that's not great and you're saying, well, I can't put my child in that school, I just don't like it. Or you have a denomination or some other preference that your public school just doesn't address, you're looking at private school. Now, private school as a grade schooler and then a middle schooler and then a high schooler, well, that can run you big money, $20,000, $25,000 a year. And if you add that on to the debt that your kids are going to take on, that's a big responsibility. So all of the education that's required when you raise a kid and you push them through college is a big expense. So having the interest rates fall to where they are now, making housing more affordable, is a big deal, because any, quarter point rate reduction in the rate is going to save you tens and thousands of dollars on a $300,000 house. And that can be put towards many, many things. Or like most people who, and frighteningly, 70% of Americans have nothing saved for retirement, which is incredibly scary for those of us who are of age that I need to retire. Luckily, we had taken care of that a long time ago, but I'm one of the lucky 30%, right? Now, we planned, but I also had jobs that I had money that I could put money away. A lot of people living paycheck to paycheck, which is, again, referencing back, you're a young couple, you're both working, or you want to have kids, or you have kids, you need that house, interest rates reduced, you can get into the house for cheaper, you can qualify, and so every dollar that you have, maybe it's going to student debt, maybe it's going to some kind of college or high school fund for your child or your children. There are so many people who are living paycheck to paycheck. So finding a best way to reduce any kind of drag on that income, and as I said, rates being what they are, that's a good thing. So let's see, the FHA rates right now are 4.125% to 4.25%. FHA is a great way to get into a property. The rates are very reasonable, cheap actually, and if you can get into this property now and be able to save yourself a ton of dough by not having to put more than 3.5% down on the property, that's also a good way by which you can reduce the burden on yourself to come up with out-of-pocket expenses at the beginning of the loan. 15-year fixed, 4% to 4.125%, and the 5-year ARMs, another great product, as I've always said. If you're looking at a short-term stay in your house and you want to really take advantage of the equity that you're building, you want to get into maybe a 5-1 ARM, 5 years fixed, and then adjustable rate mortgage afterwards. Now, this is a product that you need to be educated on because you have to understand that at the end of that 5 years, it adjusts to whatever the market rate is. Usually it's LIBOR +1, +2. Anyway, I'm Jeff Barton. Really appreciate you listening to the show, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone, give us a call, ask us a question, or you know what most people do? They don't call. What they do is they write the number down, and I get a call today, tomorrow, next week. So write the phone number down, 888-713-2929. Remember it, put it away somewhere, and when you have a question, give me a call. We have a lot of people other than myself that can answer many questions about what's happening in the market, whether you can get a loan, whether you can't get a loan, real estate questions, anything that has to do with real estate here in Northern California, and obviously places beyond. Give us a call, write it down. One of the questions that often comes up is, okay, I'm ready to go, and my agent keeps telling me I got to contact escrow this, escrow that. What the heck is escrow? And to bring us some clarity on that as an expert in the field, somebody who also educates consumers as well as agents, is Danelle Winston. And I appreciate her expertise to come on the show today. Danelle, hi.
Hi. Thank you. First of all, I want to just say thank you for having me on the show today. It's definitely an honor.
Oh, thanks.
Like you said, my name is Danelle Winston, and I have been in escrow profession for over 22 years. I'm also the founder of International Refuge Ministries, and so basically throughout all of these years, I've gained just an extensive knowledge of every type of escrow transaction you can kind of think of, stemming from commercial escrows, HUD homes, investor flips, mobile home transactions, real estate refinances, reverse mortgages, relocation assistance, REO bank owned. Yeah, it's a lot, isn't it?
It's a lot. You know what? I'm gonna stop you. I'm tired. No, it's great having someone who understands it. Now, being from the business myself, we've always taught that escrow is a neutral third party. What does that mean?
Basically, escrow stands as the liaison between all parties in the transaction. Think of it as a police. We take on that role, and we sit in the middle and make sure that every party is the transaction is going according to real estate law. So we have to know a little bit about everything.
Okay.
To make sure that everybody's in complete compliance with real estate law.
Now, I have a question for you. There are things called broker-owned escrows. Mm-hmm. And usually when I am talking to someone who wants to use a broker-owned escrow, meaning that their company also owns an escrow company, I get a little bit nervous because I feel as if that isn't necessarily the neutral third party I'm looking for. Is that valid?
I've heard that from many people.
Mm-hmm.
And what the difference is, basically, like you just mentioned it, the broker does own the escrow company. So as escrow holders, we are supposed to be neutral. But a lot of people feel that because the broker owns the escrow company, that the escrow company is going to have more favor with that listing broker.
Right. Yeah, that's the way I feel. I don't know whether that's founded or not. And your experience is yes, no, or maybe you don't know.
I've seen both sides.
Mm-hmm.
Yes, I have seen that because, of course, if that broker is writing your paycheck.
Right. Yeah, let's put it to brass tacks. No, I agree.
Yes, if he's writing your paycheck, of course, you're going to be kind of prone to navigate and do whatever the broker is expecting of you to do. But again, we are supposed to be neutral third parties. So I would hope and expect that every escrow professional out there is following that guideline.
Now, I have friends who have cash in their mattress. A lot of people who come to the United States from other countries, fear of banking, fear of government. There's a lot of that, right? Especially in Southern California.
Absolutely.
So a lot of mattress money is out there. Now, I don't know if this is true. You tell me if it's true. You cannot accept cash. Is that correct? You have to have a check or a wire?
Absolutely, you're correct.
Okay.
Escrow, we can't accept cash in escrow. We have trust accounting, which means that we have to be accountable for every wire check coming in and every check and wire going out. There's so much money laundering going on these days where we just can't accept cash. So what I try to encourage people to do is go ahead, open up a bank account, get that money deposited. There's going to be red flags because if you have about $150,000 worth of mattress money, anything over $10,000 is going to be flagged by the bank.
Right, and they have to report that to the IRS. I don't know who they report it to, but
absolutely, that has to be reported to the government in some form or fashion.
Right.
Now, with that being said, if your client has mattress money, before you guys go even looking for properties, honestly, I would advise the client, the real estate professional, to advise their client to really start putting that money in the bank.
Right.
Because it's going to be a process, and what's going to happen is they're going to put a hold on it.
Right. That's right. Yeah, and I think, anytime you slow down the trends, and that leads me to the next point. I have a number of agents that I work with. Some of them are very good, and some of them are very slow. During the slow agent process, I often get calls from escrow officers demanding or asking or pleading with either information or the EMDs or any number of items that are yet to be in escrow. How do you handle that with individual agents as well as clients?
Well, what people don't understand is the earnest money deposit is so important because that earnest money deposit actually consummates the escrow, that consummates your contract. You really don't have a fully bona fide contract until the earnest money deposit is deposited into escrow.
Right.
So I have a lot of, matter of fact, it's so funny that you just asked this question because I've had a file now that has been, we're going on the second week of them getting the file into escrow, and I still don't have the earnest money deposit, and I've been contacting the selling agent. I finally received an email from her today stating that her buyer isn't willing to put his earnest money deposit in yet because he's waiting to get an offer on his home.
Oh, I see.
So I had to explain to her that now we're out of contract.
Right.
Because per the purchase contract, we have 3 days.
Right. That's
and now
right.
We're on week 2. So what happens in that instance, the agents really need to encourage their buyers to get that money in ASAP because it can void their contract.
Yeah, I think a lot of what happens in real estate is these contracts, the statutes or whatever it is that was agreed upon, get blown through a lot, and I notice it a lot in certain areas of the state more than others, and a lot of it has to do with the earnest money deposit, getting that in on time, making sure that it's in before you're out of contract. What do? Do you drop an amendment if they're late? How does that work?
Well, what I try to do by day one. It's like when the contract is submitted into escrow, we immediately send out instructions for wire.
Okay.
Or the address for a check, however the buyer wants to submit the funds into escrow. Within a 24-hour period, I instantly start following up on that file, letting everyone know that I have not received funds yet. Please advise when escrow should expect, those funds into escrow. And, I try to hit it daily. Until that money comes in. After a while, I also have the listing agent on that email, so at any time, this gives the listing agent the opportunity to know that, hey, money's not in. So as the listing agent, they need to start calling the selling agent.
Right, and also
what's going on.
Right, the notice to performs that are available so that the seller can protect themselves and they can protect the contract. Okay, shout out your phone number for people who are looking for expert guidance in the escrow area, if you would, please, Danelle. Thank you.
Absolutely. If anyone needs any help whatsoever, you're more than welcome to contact me at 951-440-0117. Again, that's 951-440-0117. Or you can reach me by email at escroweducation escroweducation@gmail.com. And I'll repeat that again. That's escroweducation@gmail.com.
Okay, great. I have about 30 seconds left. Give us a quick example of some of the issue or an issue that really comes up all the time, which is difficult.
One of the maker and breakers in any transaction, if we can really quick talk about statement of information.
Okay.
A statement of information is a form that the title company needs. It has going to have all the pertinent information on the seller and the buyer. It's going to have their driver's license, their social security number, the last 10 years of residency and occupation. Right. That form is crucial because when you go to open an order for a preliminary title report, the preliminary title report is only going to bring up any recorded deeds, mortgage liens, grant deeds, easements, or CC&Rs that are connected to the property. There's also something that's called unsecured liens, which could be child support liens, IRS tax liens, franchise tax support liens. The title can't necessarily match up with your client until they have that seller information form.
Danelle, I got to go. We're up against the clock. This is great information. I want to have you back. I really appreciate the information. Thank you.
Oh, no problem. Thank you.
Thank you very much. And this is Danelle Winston, escrow expert. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. We answer phone calls. We answer questions. We want to spark your interest in what we're talking about so that you can pick up the phone and just get the answers that you're going to need to get. We have great guests on the show. We have great people that work at Malibu Funding, the sponsor for the show. If you go to the website, malibufunding.net, and look at the number of loan officers and real estate agents who work there. We have a sister company, eCondo, and we can really help you in many different ways in real estate. We have experts in many different fields that come on the show. One of those experts is with us again today, real estate agent, a great person, Bambi Olesic, and I really appreciate her coming on the show. Real estate agent extraordinaire. Thank you, Bambi.
Hi, Jeff.
Hi, how are you?
Good, how are you?
I'm fine, thank you very much. You know, Bambi and I were talking off air, difficult transactions, how they come up, and do they come up often?
No, they really don't come up often, but when they do, you want someone to stay on top of it to get to what you want.
Right, exactly. So in a particular case, in this particular case that we were dealing with recently, making sure that holding people together, taking a lot of heat, and heat in the real estate business is not difficult. I mean, it's not easy to handle, right?
True. That's the truth.
So give us an example of what happens when things start going a bit sour, a bit sideways, and you have to hold it together, and why that might separate you from other agents.
Well, for example, this last transaction, we had an issue with enough time on a job, and we had to make that work and show 2 years on their job, and then we had to add in their spouse who they didn't want to add in, and we had to make it work and hold it together and keep the listing agent happy and keep the lender happy and get all the paperwork and make sure people try not to have a bad day.
And we chatted about it a little bit while you were going through it. Being able to multitask, hold people's hands, as well as to pressure people that need pressure in order to get the job done is a strength, right? I mean, that's essentially what the job really is.
It really is, and you want someone who's going to fight for you.
Right.
Fight for what you want and what you need.
Right. No, I totally agree with that. All right, let's shift gears a little bit.
Okay.
What about the market? What's happening right now in Southern California area with the real estate market?
Well, what I'm noticing is that the prices of the homes are leveling off. Mm-hmm. They're not lowering, but they're not going up as fast as they were. They're kind of inching up a little bit, but we're pretty much stable, and it's a great market for sellers because it's still technically a seller's market.
Right.
but there's not a lot of buyers. So people are afraid to buy right now. They're uncertain.
Why is that? Why do you think that is? Is it because of the income? Because I heard everybody was working. Is it because the rates? No, the rates have gone down. Well, what is the reason for that sort of hesitation?
Well, from what I'm seeing is that the younger people are not quite interested right now in buying homes. In the Southern California market, they've almost been priced out of the market.
Right.
And if they can't get a home, they have to get a condo, and maybe they don't want a condo. So I have clients right now that they're just going to wait and save up, even though I told them they would be chasing the market up.
Right.
They're going to save up more money instead of getting that FHA loan or,
right.
That's what they want to do. And then you have the older people who are seeing that maybe they're not going to get as much money, or they're afraid of a downturn like we had in 2007.
Right.
And
I
they
hope
don't want
not.
to sell. I know, no, we're not. I don't see us going that direction at all. But people are scared, and
Right.
where do they go? That's the other question: where do they go?
Right. No, I agree in all that. I think that the younger people in the market are having difficulty either with their student debt, or they're just nervous about commitment, or whatever it is. Yeah, there is a fear in the marketplace for those first-time home buyers. And as you said, anybody who's looking to do a step up or a step down, they're also nervous because they're not quite sure what's happening. They don't want to get caught buying too high, and they don't want to get caught not selling high enough. So yeah.
Right. Exactly. So there's a little bit of fear there, and and then of course you look at things like the stock market, which
Right.
People say that affects how people think about the real estate market, and then the older people that they want to sell because their house is too big, and they want to do something smaller or go somewhere else. But the problem is, where do they go? I mean, you've got half the country under a ton of snow right now.
Yeah, I'm not going there.
Yeah, right?
There's no chance I'm going back to the snow. No way.
No. We're spoiled here with the weather.
I know. Even when it gets rainy, which it's been this year, obviously, I still prefer it. Even when it's 32 degrees out, we're all complaining. Of course, it's 0 everywhere else.
Yes, 32 degrees is freezing for a native Californian.
Tell me about your business. Who are your clients that you're currently working with, and where are you showing them properties?
Well, my clients vary between the first-time home buyer and the older person who wants to move. I have a client right now who is looking to move. He's going to be going probably to Texas or Arizona, that direction. So hopefully I'm going to have this great listing coming up in
Right.
Tanoka Park. And
Right.
I have investors that are going to be flipping a house, so that should be coming out pretty soon. Those are my clients right there. And then, of course, I have the first-time home buyer, and they want to save money, and
Yep.
trying to convince them that it's okay to buy.
Yeah, I think the threshold of first-time home buyers is not the financing, it's not the ability, it's a mental thing, right? It's just the commitment to the debt, really.
Absolutely. I think it's not only the commitment to the debt, especially like my clients, the first-time home buyers. They're from out of state.
Okay.
He's from Pennsylvania. She's from Maine.
Okay.
They live out here.
Right.
And to buy out here compared to what you can get in their hometowns is so different.
So
you
different.
have that mental capacity there. The debt, the amount of debt they have,
Right.
and their down payment. They could get a great first-time home buyer loan, but they don't want that. They want the 20%, 25% down loan, so their payments will be less and more comfortable.
I have a friend in St. Louis telling me that, and they used to live in Southern California. They got jobs in St. Louis. They went back to St. Louis, and they were saying, we would love to come back to Southern California, but because St. Louis, you can buy a house for $300,000, afford the house, you can take vacations, you can put the kids in private school. You try to do that out here, you're going to triple the expense of your housing, and therefore all that other stuff goes away, and you're nervous every month because it's such a tight squeeze.
Right, exactly. I hear that all the time.
Right.
And people say, I've heard more often than not, once you move out of California, you can't move back.
Right.
And it has nothing to do with not the capability. It's how much it costs you. I have friends who sold their house out here in Valley Village for well over $1 million at the time, which was about 8 years ago, and maybe 5 to 8 years ago. And they went to Las Vegas, and they bought a house 4 times as big as the one they had here.
Right.
And they have a huge yard with a pool. They paid like $360.
Right, exactly. Yeah. And you can't do the reverse. Like you said, you could sell the house, but there's not a lot of equity in a 360 house. I don't know where they are, Somerville, Henderson, somewhere in the city. But the rate of increase on the value of your house just isn't the same. Like in California, from 2007 to today, I mean, it's tripled in value, a lot of these properties. It's amazing.
Oh, it really has. And the value, I think, in California is because of our weather, because of our people. People complain, jobs, economy, whatever. California is always a constant.
Right. No, I absolutely agree. Listen, Bambi, could you shout out your phone number in case somebody out there listening wants a terrific real estate agent in the area?
Sure, I'd love to hear from anybody who wants to call me, 818-406-7144. You can also find me on Twitter at 4Bambi2, and the same at Instagram.
Excellent. Okay, so you prefer Instagram, Twitter versus email and texting. You know, I ask everybody all the time, how do they want to be communicated to? Never used to be that way. You used to pick up the phone, but not anymore.
Right?
Not anymore.
No, I prefer whatever way is good for whoever it is.
Right.
There are older people who love to pick up the phone,
right,
and I'm happy to do that. And then there are the people who are, they do the Instagram, they do the Twitter, or they want to email. They don't want to. They want to text. Whatever they want to do,
it's
I'm right there.
Exactly, Bambi. Thank you very much for coming on the show. I want to have you back. Get an update in a couple of months. See where we are. See what the market's doing. Thanks very much.
Sounds great. Thanks a lot, Jeff. See you soon.
Thank you very much. And that's Bambi Olesic, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. Pick up the phone, give us a call, write down the number, call us later. If you have questions about mortgages, if you have questions about real estate, about title, about escrow, about home inspectors, maybe as we were talking about earlier segment of the show, you want solar on your roof. You want to be able to try to help the environment. There are, the school systems that you want to make sure that you're moving into. All of these questions are what we do each and every day for any client that walks in the door, whether you're trying to get a mortgage, whether you're trying to buy real estate, whatever it is. Everybody here at Malibu Funding, the great company that sponsors this show each and every week, can help you. If you go to the website, malibufunding.net, look at all of the loan officers, real estate agents that are there, you will see that there are many, many, many people there. And if you can't find your answers through one of them, well, maybe we'll help you find somebody that can. We are in the business of trying to help people. That's the main thing. That's the kick that most of us get out of this business, is seeing people get into homes, get into some place that makes their dream come true. One of the guys that helps and has been doing it for a long time, new to Malibu Funding, great guy, George Lokes, is with us now. Hey, George, how are you?
Pretty good, Jeff. Pretty good. It's a great day. It's a great day to do mortgages.
It's a great day to move. You know what? That's almost an oxymoron. Is that right? Most of us, it's a tough job, but rates have come down a little. Why don't you tell us a little bit about how the business is right now?
Well, the business is challenging right now. The banks are trying to increase their business, and by doing so, they're dropping their fees for appraisals. They're giving lower fees for underwriting fees. They're trying to promote and also to try to stimulate the real estate business as much as they can. It's going to be a very good year. And one of my sayings I got from my mentor was that it's always a good time to buy, which is right now, because you don't know what's going to happen in the future. So if you have the ability and the money, and to buy now.
Do you see, or what do you see as a great product for somebody who's maybe a first-time home buyer?
Well, it depends on your down payment. A good down payment product is being pushed by most of the agents and originators throughout the whole nation is the 30-year FHA fixed rate loans, and that's because the down payment is only 3.5%.
Right.
So it makes you being able to buy a house without normally putting the regular 20% down they used to have in the past.
Right.
So that's a good way to get in and to buy ownership of the American dream.
Right. I agree with you 100%. I love that FHA loan. I love the fact that you can get into a property for 3.5%. And in Southern California, where we've got real estate prices, which, even though they've calmed down a little bit, they're still going up. And your average real estate property in San Bernardino, Riverside counties is almost $450,000.
Yeah, it's amazing that the market has gone up so much.
Right.
I think it's still going to be going up. As to where it's going to stop, only the powers that be know, the feds and
Right.
the banks that regulate the industry.
What are some of the challenges that you run into when you're dealing with maybe borrowers that come into your office? I mean, obviously, that's all we do is solve problems, right, to try to get somebody what they want. What are some of the most common ones that you're dealing with?
I think it's they don't know exactly how much they qualify for. I know they're
Right.
renting, and so sometimes we can put it on paper that buying a house, you can be paying less than you're renting. And they're totally amazed and by that discovery that no one told them about. So it's just educating the buyers as to how much they qualify for, and also to prep them up to the process of buying a home, which takes a lot of information they don't have, like your down payment. You have to be able to have that money in the bank for a minimum of 2 months, or else they will not let you use that as part of your down payment or closing costs.
I see. So seasoning the money, that's what they call it? It has to be at least 2
Right.
months in your bank account?
Yes, and that's paramount. And that's one of the ongoing problems we've been having. And even though we try to educate our buyers and borrowers as much as possible, it's still a problem. So it's up to the individual loan originator when they meet with the people for the first time, or prior to them buying a house, for them to be told exactly what they need and how to proceed with it. And I think you need a good person that's been in the business a long time to guide them and make sure you have a successful closing at the end.
The trust factor that you're talking about there too, right? I mean, a lot of people who meet someone for the first time, there's a little nervousness. I mean, should I show him everything I have? And your ability personally to be able to connect with people is probably a great asset, right?
Yeah, it sure is, man. You got to be really open with people. You got to be honest. You got to tell them exactly this is what's going to be.
Right.
You can't hold back anything. These are the costs. You don't want any surprises coming up at the end. You got to know exactly, give them a good estimation as to how much the closing costs are going to be, your down payment, and any other things that might come up in the course of the transaction.
Yeah, you mentioned closing costs. Give us an idea what some of these closing costs are, because that word is bandied about, but depending on which lender and which product, you can have a lot in there or you can have a little in there. What does it typically include?
It includes underwriting fee, it includes escrow fees, it includes sometimes a processing fee by the bank, not too often. Title fees, it includes appraisal fees, credit report fees, and so forth. It's sometimes it can be a lot just depending on the bank you're using.
Right, exactly. And that particular grouping of costs is presented to the buyer in something called a, what is it called? A loan estimate?
Yeah. Right, loan estimation. Yeah, they used to be called a good faith estimation.
Right.
But they did a reversal. They tagged it as a loan estimation.
Right, exactly. And normally when you get a loan estimate and then at the end you get something called a closing disclosure or a closing document?
Closing disclosure, exactly right. It's got to match up. You can't have a variance of saying you're going to charge them, say, $7,000. At the end it comes up as $9,000. So it's got to be right on for the most part, within a variance of a few dollars.
Yeah, and I think that was one of the good things that came out of the crash in 2007, 2008, right? Where you can't really sandbag a client when they have to buy a house, and at the end, their closing costs are doubled, and what are they going to do? They have to take it.
That was happening too way back then in the
Yep.
back in the 2005, 6, and 7. You would tell the clients they needed $9,000 in closing costs, and it would be like $15,000. And once you had the loan approved and ready to close, they couldn't come up with a difference. So they had to either cancel the transaction, which meant they might be losing their deposit, or
Right.
go out and borrow some money from relatives.
Or just change. They used to just change the loan limit. I mean, the loan size. So you just borrow the money.
That too. But then they have to go back into review to make sure that they do qualify with a higher loan amount.
Right, and I like the fact that you can't do that anymore, that the client is protected. And based on that, there's a whole new group of loan officers who are really dedicated in trying to help people get into what they want to get rather than try to, make as much money on each and every client.
Yeah, absolutely. There's a lot of safeguards right now, which
Right.
is most of, I guess, the consumers, if they don't do loans like often as we do,
Right.
that protects them from any unscrupulous person that might be not telling the whole truth. And it doesn't happen too often, but the safeguard is there nonetheless, and it's good to know that that the buyers and borrowers nowadays have the banks and the government, and also a lot of the originators I know have their clients back.
Hey, could you shout out your phone number, let people know how to get in touch with a terrific loan officer?
Sure. It's 951-640-8527.
Okay, and this is George Lokes. Once again with that phone number, George?
Yeah, 951-640-8527, and I work the Murrieta, Moreno Valley area.
Okay, excellent. Thank you very much for coming on the show. Once again, we'll have you back, and that's really, really great. Thanks, George.
Thank you, Jeff. Have a good day.
And thank you very much. And that's George Lokes. I'm Jeff Barton, your host for the Mortgage Voice, and we'll see you next time. Thanks for listening in.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.